Hello everybody, my name is Zach Hartley, and over the last few years I've made thousands of dollars in the form of both interest and sign-up bonuses just because I opened the right high-interest savings accounts. So in this video, I want to share with you everything I have learned, as well as how both the banks and us are making money at the exact same time, and then I want to talk about the different factors that you should consider when opening an account. At the end of the video, I'm going to share with you the tool and the resource that I've built and that I update every single month in order to compare all the different accounts here in Canada. And so without any further ado, let's just jump right in. Okay, so when it comes to a high interest savings account, what is it? Well, very simply, a high interest savings account is just an account that offers a higher interest rate. When I say higher interest rate, I'm generally talking about anywhere from 2 to 6%, maybe 6.5%. And that is higher than the typical interest rate that you'll see in most accounts that is below 1.5%. Now, in order to get that higher interest rate, we are usually paying slightly more fees in transactions, meaning that you don't want to use this account as a day-to-day checking account. You want to use it as a savings account. So that's what the general premise is behind this account. Now, why do banks offer this? Then we're going to talk about why we're interested in it. But first, why do banks offer this? Well, banks are looking to pay you interest in return for you depositing money at their bank. The idea here is that once they have your money, the bank is then going to lend that money out to other people at a higher interest rate. The difference between what they are paying you and what they are charging that separate party in interest is what they are keeping as a profit. And that number is also referred to as the net interest margin. That is how banks make money. They encourage you to deposit your money at the bank and then they lend it out at a higher interest rate. The high interest savings account is just a very appealing option for us for a number of different reasons. Now, the first reason here is that a lot of people use it as a place to store their emergency fund. It's safe, it's liquid, it's insured, and it's something that is going to earn at least a little bit of money while it is sitting in there. So a lot of people like to use it as an emergency fund. A lot of people also use it as saving for a purchase. Me personally, I just used high interest savings accounts for the last 2 years to save up for a home and purchase a property. Also, people really like it for passive income. A lot of people that have a large amount of wealth can invest their money into a high interest savings account and even live off the interest in certain situations. It's also a great store of wealth because with inflation happening, you can usually get a higher interest rate than inflation, meaning that your money is not going to lose spending power over time. And so it's a great store of wealth as well. It can also be a great store of liquidity, meaning that you can go in and take this money whenever you need it. It is not locked up, which is a huge benefit of a lot of these accounts. Now, when it comes to different factors to consider in your high interest savings accounts, here are the things that you really want to think about. Number one, you're going to find that most high interest savings accounts are either regular rates or promotional rates. The promotional rates will be higher 9 times out of 10, but they will only last for a certain number of days or months, usually somewhere between 3 and 5 months. The regular rates are not going to be locked in for a certain period of time. They're more likely to move up and down based on market conditions, and they're more likely to be steadier. They're also more likely to be higher at the end of a promotional period because these banks will use promotional rates in order to entice you to start with their bank, and then that rate will drop afterwards. Now, the second biggest factor you need to consider here is whether you want to do it in a registered account. When I say registered account, what I'm referring to is your tax-free savings account, your RRSP, your first home savings account, any of these government registered accounts that give you a tax benefit or a tax advantage. If you are going to put your high interest savings account in one of those registered accounts, it will not only change the tax implications, but it will also change which accounts are available to you. Some institutions do not have accounts that are available within a TFSA, RRSP, or FHSA. Now, when it comes to insurance, this is a super important topic here. In general, what you will find is that you can insure up to $100,000 per account type per institution. And so you can spread your wealth at different institutions, or you can spread your wealth through different account types like a regular high interest savings account, a tax-free high interest savings account, a RRSP account that has a tax-free or a high interest savings account in it. There's different types of accounts that you can open, but in general, you're only going to want to hold up to $100,000 because that's what will be insured per institution and per account type. Now, other factors to consider here are the sign-up bonuses. You can earn some very, very nice rewards in the form of both physical products and cash bonuses just by taking advantage of some of these sign up bonuses. And the last factor here to consider is whether or not the bank is online only. If you're somebody that likes going in to an actual branch and talking to a person, then you might want to focus on an account that is at an institution where you can do that. A lot of the higher interest accounts that are available to Canadians right now are online only though, so it's something to consider. Now, the next really exciting topic here that I want to talk about is rate hopping, and this talks about how you can earn more on your actual money and get the most out of these accounts. But before we do that, I want to talk about our sponsor, Koho. Now, for all of my fellow Canadians, I've got something great to share with you today. Koho is an amazing financial app that helps you to manage your money and reach your financial goals without any hidden fees and some awesome rewards. Koho lets you earn up to 5% interest on your balance, which is one of the highest non-promotional interest rates here in Canada. They're basically helping you grow your money just by keeping it in the account. You can also use their in-app budgeting tools, set up spending limits, and create savings goals and more that can help you stay on track of your finances with ease. And worry not, your funds in a Koho account are insured by the Canada Deposit Insurance Corporation, CDIC, up to $100,000. Not only that, but with Koho, you can also earn up to 2% cash back on things like transit work with over 1,000 of your favorite brands. And you can even build your credit score with their rent reporting and credit building tools. So if you're ready to start managing your money smarter, download Koho with the link in the description and use my code ZAC20 for a $20 cash bonus when you sign up today. So take charge of your finances with Koho, a better way to spend, save, and grow your money. All right, now let's take a quick dive into rate hopping. And just as a warning here, this is something that is going to take a lot of work, a lot of effort. It's going to take a bit of time. You're going to be on the phone with customer service, and it's not always a super convenient thing, but it will allow you to get a higher return and a better overall outcome on the money that you're holding in these high interest savings accounts. Now, when it comes to rate hopping, what I am referring to is taking advantage of whatever account is offering the best promotions, either in the form of a higher interest rate or in the form of a sign-up bonus. Take advantage of that entire promotion, get the bonuses, take advantage of everything that that account can offer you, and then as soon as that promotion is done, we are going to empty out that account, we're going to pull our money out of it, and we are going to put our money into the next best promotion. A lot of these times, these banks are competing with each other, and so they will tend to have new promotions all the time, or a new bank will have the next best promotion. And so what we are doing is we are hopping from bank to bank to get the best interest rate and the best sign-up bonuses. In order to do this, all you have to do is figure out which account is going to be best for you, open your money, take advantage of that account. When that promotion ends, you want to find the next best option. It's quite simple, but one thing that you should consider right now is in an environment where the best interest rates you're probably going to find are 5.5% to 6%. Koho is actually offering 5%, which is an amazing deal, an amazing offer. And if it's not worth the time and the effort, you might as well just go with Koho because it's an amazing company and they're giving you 5%. And I personally use them. They're on my phone. I use their cards. I think they do a great job. So just something to consider in the overall picture here. Now, when it comes to actually figuring out what account to open, here is what I have done. I've built basically a spreadsheet that compares every different high interest savings account that you can open here in Canada. And I allow you to sort it by the sign up bonus or by the interest rate or by the institution, whatever you prefer, but it allows you to focus on what works best for you. Now, the link to download this spreadsheet is going to be in my Stan store at the link in the description down below. You can download the spreadsheet. It's completely free. All you have to do is put in your email and then I will send the spreadsheet directly to you. It is going to be the best tool that you can find, and I update it at the beginning of every month. It was updated just a few days ago, and I'll update it again at the beginning of December. Use this spreadsheet to try and figure out what account is going to be best for you. This way, you don't have to research every account that's available in Canada. I'm going to do that once a month, and you can access it for free. All I ask is that maybe you hit that subscribe button, and I'm also going to do breakdowns on YouTube Shorts here as well as TikTok. So if you're not following, you're going to miss the breakdowns. I'm going to give you updates as to which ones have increased their interest rates, have decreased it, which one I think is the best at the time, and everything that you need to know about the monthly updates. So highly recommend it. That link will be down in the description down below. Now, I just want to give you some other options. When it comes to where to store your money, you've got lots of different options. opening a high interest savings account isn't the only option. So I just want to show you what else is available. One thing that's available is called an ETF, or exchange traded fund. These ETFs, you can find some of them that focused on high interest savings accounts. And what happens is they will put the money into a variety of different high interest savings accounts, whichever ones they can negotiate the best rates with. And then what they will do is they will package it up into an ETF that you can buy in the stock market. The advantage here is that the commissions and the fees are very low. You have the same liquidity that you would have with a regular stock, so lots of liquidity, which is really nice. They have very good interest rates that are usually comparable to somewhere in between the regular and promotional rates. And the nice thing that a lot of people like here is that they can keep this investment with their stock portfolio. So if they want to put money in and out of the account, it's really easy. If they want to just see their portfolio as a whole, this way it's all together. And so a high interest savings ETF is a very, very attractive option. It's also something that can be bought within an RRSP, FHSA, and TFSA. So great option there. Other options here are guaranteed investment certificates and bonds. The only downside to these two options is that there's usually a bit of a lockup period, or you'll have to pay a bit of a fee in order to get your money out of it. And so a lot of the times you can find very, very safe investments. You can also use much larger dollar amounts and feel fairly safe. For instance, if you are buying a US government treasury bond, which is also referred to as a T-bill, it is a very, very safe investment. The only reason that investment would default is if the United States government was unable to pay. Which as of right now doesn't look like a very likely situation. However, it is something that is of hot debate. So if you have any opinions on that, leave a comment down below. But these are other options that you should be aware of. They can get you very attractive interest rates, but a lot of the time they do have more restrictions than you would find with, for instance, a high interest savings ETF, an account with Coho, or an account with any of these other banks that offer high interest savings accounts. Now, what do I personally do? Well, there's a couple of different things that I do. Number one, I rate hop when a good promotional interest rate comes around. I have personally already opened accounts with a lot of the best high interest savings accounts that are available right now. But when a new one comes around or they have a big sign up bonus, I definitely take advantage of that. Inside of my investing account, I like to keep any cash that I'm holding in a high interest savings ETF. And so I do that inside of basically my stock market portfolio. And so any cash that I'm sitting on that I'm not sure what to do with, or that might be there for a little while, it goes into this account so that it is going to earn some interest. My emergency fund, though, is kept on Coho, earning 5%, and it's accessible on my phone whenever I need it. And so it's really about how you use this to your advantage based on your own personal situation and personal preference. Now, like I said, if you're interested in signing up for Coho, you can use the code ZACH20 and get a free $20. You can also download my high interest savings account spreadsheet at the link right below that in the description here. And please make sure you subscribe to the channel so you can stay updated on what happens to these accounts over time. Thanks so much, and we'll talk to you soon.